Europe's central bank just flipped, and if you hold XRP, you better pay attention. The European Central Bank, the same institution that once called crypto a threat to monetary sovereignty, just sent a signal that changes everything. You're about to see how this policy shift ties directly into Ripple XRP and the infrastructure being quietly laid for global cross-border liquidity. Forget hype. Forget price noise. What we're about to uncover isn't some speculative moonshot. It's a geopolitical shift in the financial plumbing, and XRP is right in the middle of it. If you own even a single XRP, you need to understand what just changed in Europe and why it could be the institutional greenlight Ripple has been building toward for over a decade. Before we go deep, smash that subscribe button and turn on notifications, because this channel is your edge in a financial system being rewritten in real time. Let's break it down. The ECB's flip. What just happened? Expanded. Let's start with the spark. In June 2025, something happened that almost nobody's talking about, but it will go down as one of the most pivotal moments in crypto adoption history. The European Central Bank, ECB, arguably the second most powerful central bank on Earth behind the Federal Reserve, just formally acknowledged that blockchain-based assets, yes, including tokens like XRP, can enhance financial stability and liquidity in cross-border payment systems. This wasn't a throwaway comment. This was buried deep inside a technical bulletin titled, "The Role of Tokenized Financial Infrastructure in Europe's Future Settlement Network." What it said was clear. Tokenized assets, programmable liquidity, and interoperable digital payment networks will likely complement existing clearing systems and, in specific scenarios, reduce counterparty risk and increase settlement efficiency. Translation: the ECB just told the world that crypto-based payment rails are no longer a threat. They're becoming necessary. Let that sink in. Just 2 years ago, back in 2023, the ECB published articles warning the public about cryptomania, and Christine Lagarde herself called crypto assets based on nothing, dangerous for retail savers, and a threat to monetary sovereignty. But now, that same institution is openly studying token bridges, programmable settlement, real-time cross-border clearing, and calling them foundational innovations. And they're not just studying theory. They're watching what's working in the wild. That's where Ripple and XRP come in. Key development: from skepticism to strategy. ECB President Christine Lagarde dropped the bombshell in a June 2025 press briefing. Tokenized forms of currency and programmable payment platforms will play a complementary role in the evolution of Europe's digital financial system. Read that again. Not may play, will play. This is the head of the central bank that prints the euro. She's not talking about stable coins. She's not talking about Bitcoin. She's referring to infrastructure, the plumbing of programmable money. And when you break that down into actual technologies that exist right now, only a handful of platforms can support what she's describing. That short list includes RippleNet, XRP Ledger, and the infrastructure Ripple has spent the last 12 years quietly building. Let's connect the dots, because this isn't random. Here's what's happening behind the scenes. The ECB's digital euro project has now moved into phase 2. That means it's beyond research and heading into real-world testing with selected banks and institutions. They're not just testing a consumer-focused euro coin. They're exploring wholesale CBDCs, digital euros used by commercial banks to settle massive interbank transfers. These require real-time liquidity solutions, cross-border bridges, and tokenized value swaps. Ripple already has live pilots of that exact setup through its work with Banque de France, Monetary Authority of Singapore, Digital Pound Foundation, and multiple central banks under NDA. Now, here's the kicker. In a May 2025 policy paper, the ECB outlined 3 technical pillars they say are non-negotiable for the future of digital settlement: real-time settlement capacity across borders, native interoperability between ledgers, token bridging mechanisms for on-chain and off-chain value. Let me ask you this. What blockchain ecosystem is literally built to handle that exact trifecta? XRP Ledger. RippleNet's on-demand liquidity, ODL, product is already used by hundreds of financial institutions for real-time, cross-border settlement, using XRP as the neutral bridge asset. So when the ECB says it's prioritizing real-time FX token bridges, they're basically describing ODL in regulatory language. From theory to execution. This is not theoretical anymore. These aren't sandbox simulations. This is live infrastructure. Ripple is the only blockchain company that has licenses in multiple EU jurisdictions as a virtual asset service provider. The SP offers real-time FX settlement using a compliant, energy-efficient token. Works directly with governments and central banks on programmable payment architecture. So when the ECB says they want tokenized bridges to reduce FX inefficiencies, what they're actually saying is, we need what Ripple has already built, and they're finally admitting it. Why this flip changes everything. Let's be crystal clear. This flip isn't just a friendly press release. This is policy realignment at the very top of Europe's monetary system. Here's what it signals. Central banks are no longer fighting crypto. They're absorbing its core technology. Blockchain-based platforms with institutional-grade compliance and utility are now being considered critical infrastructure. The next wave of regulatory support and capital inflow will follow tokens with real use cases, not memes, not speculation. And that's why XRP just stepped into the spotlight. Because Ripple's architecture is one of the only platforms that ticks every box the ECB just elevated to priority status. Real-time settlement, programmable liquidity, bridge between multiple fiat and digital currencies, scalability for interbank operations, regulatory clarity. It's not just a crypto flip, it's an institutional shift. The floodgates are creaking open. This ECB bulletin is the signal before the wave. Now that Europe's top monetary authority has signaled that tokenized assets will have a role, it's only a matter of time before European banks begin testing RippleNet corridors. Commercial clearinghouses experiment with XRP as a bridge token. EU regulators accelerate support for liquidity-backed tokens. And when that happens, utility-based tokens like XRP won't need hype to move. They'll move on volume, on infrastructure demand, on policy green lights, the same way oil moves through pipelines or electricity moves through a grid. That's what this shift is really about. Not price pumps, but a monetary network upgrade with XRP potentially at the center. While most eyes were glued to the SEC courtrooms in the US, Ripple was doing what it always does best, building silently, strategically, and globally. While mainstream headlines obsessed over legal drama and influencers debated XRP price predictions, Ripple was embedding itself into the very core of Europe's financial transformation. And now, the map is lighting up like a fiber optic cable coming online. Let's break down what most people missed and why it's likely XRP is already part of the EU's digital settlement infrastructure. Strategic moves that flew under the radar. Ripple didn't just expand to Europe. It built an institutional fortress. Between 2023 and 2025, Ripple quietly positioned itself in every key regulatory and financial hub in the European Union. Let's zoom in. 1. Offices in Dublin and Zurich. Ripple set up new European headquarters in Dublin, Ireland, one of the most crypto-friendly regulatory environments in the EU post-Brexit. Zurich, Switzerland became its strategic base for token custody and institutional services, plugging directly into the heart of Europe's private banking ecosystem. These weren't vanity offices. They were beachheads, fully licensed, compliance-ready, and engineered to meet MiCA regulations and ECB supervisory standards. And they came with teams focused not on retail hype, but CBDCs, liquidity routing, and digital asset custody for major institutions. 2. The $250 million Medico acquisition. In May 2023, Ripple made one of the most underappreciated moves in crypto history. It acquired Medico, a Swiss-based institutional-grade custody provider, for $250 million in cash and equity. Medico isn't your average crypto wallet company. This is a firm trusted by Standard Chartered, DBVA, Société Générale, DZ Bank, Germany's second-largest bank. Their platform, Harmonize, offers tokenized asset custody that's fully programmable, modular, and MiFID2 compliant. Exactly what's needed for regulated banks to interact with CBDCs and liquidity tokens like XRP. By buying Medico, Ripple didn't just gain a custody arm. It gained direct pipelines to Europe's most conservative, risk-averse banking giants. And through those pipes, XRP is already flowing, whether people realize it or not. United Kingdom 3, Model Partnership, UK and EU corridor domination. In parallel, Ripple struck a major partnership with Model, a regulated UK-based payments platform approved by the Financial Conduct Authority, FCA. Model handles real-time payment rails across the UK and Europe, including integration with SEPA, Faster Payments, UK, BACS, IBAN systems. RippleNet Mail powers real-time settlements for businesses across 36 countries in the European Economic Area using Model's native interfaces. This means any company plugged into Model's API is potentially routing payments over XRPL-backed liquidity rails, with XRP as the settlement asset behind the scenes. It's like Stripe for Europe, only this time, liquidity optimization and FX routing are programmable using blockchain assets. And that brings us to the next point. 4. XRPL-powered liquidity corridors are expanding fast. RippleNet corridors in Europe have quietly gone live or scaled in Sweden, Germany, France, Italy, Ukraine. Yes, Ukraine, a country in urgent need of real-time financial infrastructure. Ripple has been supplying liquidity solutions for remittances and humanitarian transfers, showing how blockchain can solve real-world payment inefficiencies. But this isn't just about payments. This is about liquidity engineering, using XRP to eliminate the need for Mastervostro accounts, free up capital for institutions, and compress settlement timeframes from T+2 to T+0. This is Ripple executing its master plan quietly in the background, while everyone else chases hype coins and headlines. 5. XRPL sidechains and the CBDC interoperability play. Now here's where things get serious. Ripple isn't just running corridors. It's engineering digital infrastructure for the ECB's future roadmap. Since 2022, Ripple developers have been building sidechains and federated bridges to the XRP ledger to enable tokenized asset issuance, CBDC simulations, smart contract logic via hooks and sidechain validators, private state channels for central banks. These pilots, running in parallel environments, allow central banks and commercial banks to test synthetic CBDCs, conduct interbank swaps, simulate real-time FX transactions with XRP as the neutral liquidity layer. And in 2024, internal ECB discussions, obtained through leaks and policy briefings, included a term that set off alarms. Token bridge liquidity mechanisms were listed as a strategic priority for pan-European settlement architecture. That's Ripple's exact terminology. Nobody else in the blockchain space uses that language so consistently. It's not a stretch to say that Ripple's fingerprints are all over the architecture being designed behind closed doors in Europe. And given Medico's ties to banks like Societe Generale and DZ Bank, it's likely that test corridors involving tokenized CBDCs and XRP have already happened privately. Behind closed doors, Ripple may already be integrated. Look, no central bank is going to come out and say, yes, we're using XRP right now. That's not how it works. What they will do is test Ripple's infrastructure under NDA, integrate compliant versions into sandbox environments, and wait for regulatory clarity, which the EU already has, thanks to MiCA. Here's what we know. Ripple was invited to multiple BIS Innovation Hub working groups. It worked directly with the Digital Euro Association. It helped shape technical recommendations on programmable liquidity standards. And if the ECB's internal papers are borrowing Ripple's language, referencing token bridges, and defining liquidity mechanisms the way Ripple does, then XRP is already functionally part of the blueprint. The only thing missing, formal launch, from sandbox to live rails. So here's where it gets exciting. The ECB has officially acknowledged blockchain payment systems in their June 2025 bulletin. Ripple has infrastructure, partnerships, regulatory licenses, and proven corridors across the EU. The XRPL has programmable architecture already tested for CBDC compatibility. The only step left? Transition from sandbox to live rails. And once that happens, XRP doesn't need speculation to move. It'll move on volume. It'll move on integration. It'll move on European commercial banks using it to reduce settlement costs and unlock liquidity. And the market won't be able to price it in fast enough. The coming collision, digital euro meets XRPL. This is where it gets interesting. The ECB's digital euro isn't just about retail payments. The real game is wholesale interbank settlements. And it's here that XRP's value proposition becomes unavoidable. The ECB is exploring 24/7 cross-border clearing, tokenized assets on interoperable ledgers, bridging commercial bank tokens and CBDCs. Sound familiar? That's literally what Ripple's CBDC platform was built to do. In fact, Ripple's CTO David Schwartz stated that the XRPL's unique issuer-free liquidity model is ideal for inter-CBDC bridging, removing friction, minimizing counterparty risk, and collapsing settlement times from 2 days to 2 seconds. Meanwhile, the ECB is testing trigger solutions that automate cross-ledger flows, tokenized collateral swaps in real time, programmable payout logic for automated finance. Every single one of those is already functioning on the XRPL through hooks and sidechains. This isn't speculation anymore. The digital euro won't run on XRP, but XRP could become the neutral liquidity bridge between digital euros and other currencies, just like how Ripple's ODL model works today. That's trillions in flow potential. And the ECB is now openly discussing this interoperability model as urgently needed. Institutional liquidity is coming, and XRP is back in play. Let's talk money. The ECB flipping its tone does one thing above all: de-risks blockchain liquidity for institutional allocators. This means European commercial banks can experiment with XRP as a settlement asset without fear of regulatory backlash. EU-based remittance companies like Santander, Asimo, and Tranglo can scale RippleNet integrations using XRP for float optimization. Hedge funds and FX desks can leverage on-demand liquidity corridors in Europe without being frozen by compliance departments. The 2024 markets in crypto assets regulation MiCA was the turning point. It created a legal framework that now recognizes utility tokens, liquidity tokens, stablecoins, and yes, bridging tokens like XRP. Ripple is already licensed as a virtual asset service provider, VASP, in multiple EU states. Now that regulatory clarity exists, the only thing left is volume. And that's where institutional demand hits. Multiple reports from 2025 show that Ripple's ODL flows in the EU increased 260% YOY. $3.5 billion in value flowed through European corridors in Q1 alone. More than 20 Tier 1 banks are now in active discussions about tokenized FX pilots with blockchain partners. You think that happens without the ECB giving the nod? Not a chance. The final trigger: XRP's role in the next monetary layer. This is the part most people won't believe until it happens. The ECB's shift isn't just about being pro-crypto. It's about preparing for the next monetary layer where CBDCs operate 24/7 across borders. Commercial banks settle in digital tokens. Value moves like email. And blockchain assets like XRP become core infrastructure. Here's what you're not hearing. Ripple has been quietly attending bank for international settlements, BIS, innovation hub meetings under NDAs. They're exploring how neutral liquidity bridges can reduce systemic FX slippage. The IMF has already stated that a supranational liquidity token could reduce costs of global settlement. Translation: they're soft-pitching XRP without naming it. And with the ECB now open to blockchain-native infrastructure, we could be months away from seeing Ripple step into a formal EU-level working group to pilot real liquidity mechanisms. That would be the spark. Not hype, not speculation, just XRP doing what it was always designed to do: act as the Internet of Values core bridge asset. And now, Europe just opened the gates. This is it. The European Central Bank just rewrote the rules of engagement. Ripple is already embedded. XRP is already licensed. The regulatory clarity exists. The tech works. And now, the policy narrative just flipped in XRP's favor. If you hold XRP right now, understand this. You're not holding a meme. You're holding infrastructure. The next wave of monetary evolution is no longer hypothetical. and Europe just proved it. So here's the move. Double down on understanding utility. Watch the corridors, not the charts, and follow the institutions, not the influencers. Because while everyone's waiting for hype, XRP is being wired into the pipes of the global financial system. And when it activates, the price won't creep, it will snap. If you found this breakdown valuable, hit that subscribe button, turn on all notifications, and join us here at Be Crypto Smart, where we decode the signal behind the noise. This is just the beginning.